Hi, Jim Robinson with the Premium Daily Commodity Newsletter. We're going to take a look at a few charts here. What looks to be happening is the dollar looks to be coming into a high. It's making like a double top here, and the 14-day stochastic is making a bearish divergence here. So if this market turns back down and closes below the 10-10 bands, there's a good chance it tops in. And again, you never know, these markets could just keep going. These uptrends sometimes will go a lot farther than you think they will. But the best odds are right now that a dollar is coming into a trading top. Gold, if the dollar's coming into a top, the odds are that gold is coming into a low. So here's a new price low in gold, and here's a higher price momentum reading on the 14-day stochastics, which means a low is probably coming in gold. And again, gold didn't close above the 10-10 band yesterday. If it would have, I might have put out a buy trade for gold, because that's the first sign that maybe the market has turned. It's usually better to have full bars above the bands, but sometimes that gets you too high of an entry point. Sometimes you're better off just anticipating a little bit and getting a little closer to the bottom. But the problem is it didn't even close above the band, so I just totally skipped the gold trade yesterday. But gold looks like it's coming into a low. Now there's nothing saying that these markets can't make this rally here and turn back down and make a double bottom at support here. This would be like a double bottom. So gold can it's kind of a make or break, where either it's going to take off and break through resistance and do a bull swing, or come back down and test again. We just have to be patient and let the market work out whatever it's going to work out here. Bonds look like it broke out to the upside here, and again, that was on bearish divergence. And bearish divergence doesn't always work. This bullish and bearish divergence doesn't always work, but it's something that you got to keep an eye on, because it's an early warning of a market turn. And bonds could have, if they would have just wanted to keep going, they would have just kept going, bearish divergence or no bearish divergence. But a lot of times, bearish divergence will call a market top, which looks like what happened on bonds here. Now bonds is trading back below the 10-10 high-low bands, and the 14-day stochastics is hooked over and moving lower, shows the momentum is down, so bonds look like they're heading lower. Coffee is kind of the same picture as gold. It looks like it could have made a bottom, but it hasn't closed above the 10-10 band yet. It may make another trip down here to support, but again, the second you start looking for another move down to support, it'll make a nice bar up and go through resistance, and then it'll be off and running. So we're just going to again, coffee's kind of a make or break. It's either made a bottom or it's going to come down and test. Now it could break support and keep going, but that is the least likely thing that would happen right now. Again, the odds are these markets are bottoming. Corn is the same thing, and all these markets that we're looking at pretty much follow the gold and the dollar. So this market's just tracing out what gold's tracing out. Gold's making a rally, corn's making a rally. If gold comes down and tests support, corn will probably come down and test support. So again, if I had to say, I'd say the low is in for corn. I'd have to say that even if today's a down day in corn, it's going to continue higher from here, but there's no reason it couldn't come back down and test support one more time before taking off. And beans, same thing in beans. It looks like it's made a bottom. It's starting to close above the bands, which is a good bullish sign. It could come back down and test support, so we just kind of got to hold long. We're long beans, and we just got to see what happens. That's why I got the stop down at like 880, which is down here somewhere, which that gives us a little room in case beans were to come down and make a little lower new low, because we'd still be in a pretty good spot because we got long on this bar. So we really wouldn't want to get stopped out of this trade if it just came down and made a slight new low. If it looked like beans were really going to break, then we'd get out no matter what the stop is. So I'm bullish beans right now. Bullish wheat, pretty much the same chart as beans and corn. Again, it looks like a low's in. There's bullish divergence on the stochastics. When the red line's above the green line on stochastics, that means the short-term momentum is up. So that is bullish. That puts the odds with more upside from here. Today, right now, and the markets kind of looks like it's shaping up to be a bearish day, but that could just be like another consolidation day. I mean, even if it is a bearish day, that doesn't mean necessarily wheat's going to trade way way down from here. It could just go down a little bit, and then Monday it could pop right back up. But again, there's no reason it couldn't come test support. It's possible it will break support, but I think that's very unlikely right now. So I think wheat is at or close to a major low, and so basically I'm still bullish gold, bearish the dollar, bullish all the commodities, and we'll just go from there. Thanks for listening to my video. Jim Robinson, ProfitTrading.com.